Hello, gang. Welcome back to Market Talk Monday with Isaiah Porter
What's
and
going
the
on?
gang at Foundations Investment Advisors. How you doing today?
Good. What about you?
I am doing okay. We're going to talk about the week ending January 30th
hmm
and all the exciting things going on in the market. It was a little crazy last week with the movement of gold and silver. We'll talk a little bit about that.
hmm
And then kind of the week ahead and what clients can expect. So give us a little debrief. What's going on in the world?
Yeah. I mean, the first thing is I had a client meeting last week, and a couple came in, and it was almost like she wasn't really arguing with me per se, but and I won't say the client's name, but she was telling me that she couldn't foresee the price of silver or gold going down.
Mm,
And I was telling her, because she asked me, she said, I think I'm going to put all my money in this commodity. And I was like, I wouldn't do that. I was like, I told her, and I gave her the same example I said last week. If you have a commodity or an asset, and it may not be the most riskiest investment of them all, but it becomes risky when you don't diversify away
yeah.
and you have all of your assets or all your eggs in one basket. So I told her I wouldn't do that. And my advice to a lot of people out there is if you're going to have a commodity in your portfolio, it's good. I like having gold and silver inside the portfolio, but on about 5 to 10% of the total portfolio value.
Yeah.
Just because
More than that, you're very concentrated.
yes, very, very concentrated inside the portfolio. And as we talk right now, the 5-day return on silver's still up, of course, year to date, still up 10%. 1 year, it's still up 141%.
Yeah.
5 days, it's down 27.10%. And yes, if you bought it a year ago, you're up 142, but 26% now keeps changing. 26% is still a big hit to take on one position.
Yeah.
And then, of course, that comes into play with, we talked about it over the weekend with the reason that's happening is because there's supply and demand and how these retailers and these basically gold brokers or silver brokers going to fund the mass purchase of all the silver and gold.
Yeah.
Turns to people selling off, and when you have a massive sell-off, that's where you see the depreciation inside the asset. But another thing that added into it was Trump nominated Kevin Warsh,
Hmm.
who had his economics degree from Stanford, I believe, and then Harvard Law.
Smart guy.
Yeah, master's degree, smart guy, but he's very hawkish. Is everything that I've been reading about him. I read
Well, hawkish in gold and
Oh,
and silver.
he's got a hawkish take on. He's not very much of what I was reading. He's not very much of a rate guy. He likes to look at inflation. Very hawkish on inflation and prices. So back in 2008, 2009, he was on the Fed Senator board, I think, with George W. Bush, who's was the president that appointed him, and he was in. If I read it correctly, I think he was in the state of more. Let's keep rates a little higher to keep a cap on prices.
Mhm.
So he's very hawkish on inflation. So that caused some disruption in the market where they think, well, Trump wants to cut rates. Why would they appoint a guy that's very hawkish on wanting to cut rates? I think he's going to come in and probably cut some rates, but that story's still yet to be told.
Yeah.
But in other news and other sides of the market, we had 127 S&P 500 companies are reporting this week. Some already reported last week, and the earnings per share growth was higher than expected. Expected was 8.3%. It turned out to be 11.9%. Revenue growth was expected 7.8%, and revenue growth was actually 8.2%. So strong earnings, but still we saw a little bit of a sell-off heading into the weekend. So there's some good points there. And then closing up with market performance, S&P's up 0.3%, Dow was down 0.4%, NASDAQ 0.2% was down, and then the Russell was down 2.1%. So it's been kind of a little bit of a rough week for the small caps. Even still, though, January finished off with the Russell up 5.3% and S&P up 1.4%.
So with our clients, and we look at the portfolios that
Pull it up.
you have clients diversified in.
Mm-hmm.
Give me an update, if you would, on our core holdings and then those satellite holdings.
Yeah.
How are those performing compared to the market?
So year to date, the core 60 is up 2.1%. S&P is up 1.45%. Unconstrained year to date is up 0.86%. So we saw a bit of a sell-off due to the AI.
Yeah.
And then inflation-sensitive models up 1.95%. Again, that's mirroring some
So
commodities.
core
like
60 compared to the S&P.
500 is taking theoretically 40% less risk.
But what was the rate again?
2.18%.
And the S&P's currently?
1.5.
Okay. So, and these are all quotes before or after fees?
Right now, it's no advisory fee on there.
Okay.
So if we just did an average of one, I didn't take. Let's do 1%. With 2.09% year to date.
So it's still outperforming
by
major
50
indexes.
Yeah, by 50 basis points.
Yeah.
Taking 40% less risk.
So the thing that just resonates with me, one, you're going to hear us say this in all of our market commentary and questions that I ask you and how the advisory is doing, is that when we pull back the cover and we look at what's underneath,
Mm-hmm.
what's underneath in every successful portfolio should be diversification.
Absolutely.
It's not sexy, can be a little boring, but especially in the retirement distribution phase, coming down the mountain,
Mm-hmm.
being well diversified is going to be the key to your money lasting longer than you do.
Yep.
The other part of this is that when you go into the distribution phase, the one thing you're going to always hear us say is that you're now going from paychecks to playchecks, right?
Mm-hmm.
To you're in the distribution phase. Your assets are providing the income. Your assets are providing the paycheck. What matters in the distribution phase, no matter if you're Elon Musk or Kenneth Porter, income is the outcome.
Yep.
And we used the example in the past of Elon having a liquidity issue. And you think, how can the richest man in the world have a liquidity issue? It's because the assets were tied up inside of holdings. And when he needed to get to money, he had to sell off some assets to create money, or he had to go borrow against stock.
Yeah, go to a broker that was going to let him borrow.
Yeah. So income is your outcome in the distribution phase. The noise that you will hear at home and around friends and family, coworkers who are still in the accumulation phase, they're just different than you.
Mm-hmm.
And so you have to remember what phase of life you're in, and that for you, a lot of the noise that's going on in the market doesn't necessarily apply once you're in the income phase. Now, to Isaiah's point, if you were overly exposed to silver and gold, like the lady who came in late last week, that stings a little bit waking up today, looking at your portfolio and seeing silver down 38%.
Go to bed Friday night, close of the market, and silver's down 38%.
Yeah. Yeah, we were trading close to 105, and then I think it dropped
to 70 in the 70s.
70s,
Still in the
yeah.
70s. And then
trading around 78 right now.
Mm-hmm. And then gold had its biggest one-day drop in 40 years. It was down 15% Friday.
So, folks, it is the tried and true story that if you have all the eggs in one basket and you drop that basket,
pay the piper.
Pay the piper. So, what's your take on the rest of the year? So we're now officially 1/12
of the way through the year,
our market year.
Yeah.
You still bullish?
I'm still bullish for 2026. I think there's some things to play out. I'm very interested to see what Kevin Warsh does when he comes in. Darren said in here he's a favors balance sheet reductions.
And folks who are new to Darren, explain who
Levitt,
Darren is.
Our CFA at Foundations. He is the head honcho over there, in charge of managing all of the models, with of course our support. But he's the head honcho, the big man on campus. But I'm still bullish for 2026. I am interested to see what the new Fed does.
Yeah.
I think that will have some major plays on what goes on in the market. What's your thoughts on Kevin Warsh? Have you done any research on him?
Well, just a little bit. When I looked at all the nominees, I was actually a little surprised
he got it,
that he got the nod. But he's run in the research I've done, he's run a hedge fund called Duquesne.
Mm-hmm.
Well, actually, it's a family office based out of Pittsburgh.
Yep.
That he's, and so when you think about someone who's sensitive to inflation, that's the second greatest eroding factor in wealth, next to taxes. So when you're running a $1 billion private family office, and I think he was managing 4.1 billion. And what's interesting about that is he's managing for one family
What
4.1 billion.
What massive advisories have.
Yeah, and like Foundations Investment Advisors, the entire client base I think is a little over 8 billion.
Yeah, I think we're broaching 10.
This guy was managing for one family 4.1 billion, which is insane.
I mean, I kind of like having a guy like that come into the Fed, because when he's running fiscal policy, you look at it, he has to run a fiscal policy because he's an economics major, so he's running the economics for one family.
Yep.
Now that family has 4.1 billion, so their economics their family economy looks a little different than a lot of other family economies, but the rules still apply to the family no matter how much money you have.
And diversification is key for managing those type of assets. Like one of the greatest hedge fund managers in the world,
Mr. Ray Dalio, Bridgewater Associates, formerly Bridgewater Capital. The thing that I love hearing Ray talk about is an all-weather portfolio. That you have to be seasonal with your investments, because investments come in and out of season and come in and out of favor. Just like Bitcoin. I mean, we saw Bitcoin go to, 100 and... Yeah, it's at 77,000.
It's at 77 now. So that has had some indirect effect on our unconstrained
a little bit.
Side
We
of
have
the program, right?
we have an ETF that tracks Bitcoin. We don't trade the actual currency, cryptocurrency.
So what are you guys planning to do there this year with that portfolio? What do you think?
I think we're going to stay mostly in the AI sector, because that's where you're going to see most of the growth, in my opinion. From the NASDAQ and S&P this year.
Does that also pick up some commodities like gold and silver in that?
It does on a smaller scale. Mainly our inflation sensitive is what's picking up the commodities.
Okay.
But speaking of commodities, we've seen a good run on oil. 13.1% is what it closed out on Friday due to U.S. and Iran tensions. Still waiting on that.
Yeah. Yeah, well, my opinion is that if Iran continues to negotiate with the White House, we will likely see a pause on any military action.
Yeah, Iran doesn't want to do that.
They don't want the smoke. However, I think the average normal Persian and citizen of the Mideast, of the non-radical, radicalized Muslims or terrorists, let's just call them what they are, they could care less. Right? But those who are in the Middle East and they embrace the idea of working with sovereign nations, working with the West.
Well, and too, if you're a dictator or a leader and you're the man in the high castle, you want to stay in the high castle and stay where you're at.
Sure.
And you pick on the U.S. or you pick on other sovereign nations, you could lose your high castle pretty easily. So I think a lot, like even all the way down to North Korea, people were scared Kim Jong-un's going to get a nuke and launch it. I don't think so, because I think he likes where he's sitting pretty comfortably.
Yeah.
I think he likes to use it to put pressure and apply pressure on certain aspects of the geopolitical space, but I think they like where they're sitting.
No quicker way to dismantle yourself and have your country annihilated than to be responsible for letting a dirty bomb go or letting a nuke go. Yeah, that's not going to work long term for anybody. So barring that from happening, your opinion's still strong on the year that we see another positive year. Going into the spring of 2027, though, we do have the potential outlier of China
and Taiwan.
They've said it over and over again. They want their military ready by then. So that world event is something I think we still continue to pay
that's something
close attention to.
You'll see in our portfolios is you'll see it's already sort of happened in the portfolios where you see more ETFs that are tailored towards aerospace and defense sectors, just because those companies, and even Trump said it himself, whether you love him or hate him, that he wants growth in all these companies. He wants people to turn their dividends off and apply growth into the economy. So I think that's going to come mainly from AI and defense sectors, because he wants to build back the military, build it stronger, in his words, stronger than it's ever been.
Yeah. So consumer confidence in January fell to 84.5 from the prior reading of 94.2.
Lowest since 2014.
Yeah. Any concern there about the economy and the labor market really driving that
So
decline?
the jobless claims remain stable. So it ebbs and it flows. I think there could be, when consumer confidence falls, you'll see less activity in the economy, less people going out and purchasing and buying. So that is what I'm keeping kind of an eye out for, is when people aren't buying, they're usually doing what? They're selling. So when you're selling, that's when you can see a little bit of a pullback. But even with that, I'm still pretty bullish for my positions in 2026.
So the producer price index did increase by 50 basis points, and it was above the consensus of 0.2. Core CPI, which includes food and energy, that increased by 0.6%, so above the anticipated 0.3. So there's kind of a mixed bag in some of the measurements that we're seeing out there. Your thoughts moving forward, that 2026 is kind of more of the same, where we're going to see steady growth?
Yeah, I think so. Steady growth. I mean, end of January, we're up 1.4%, and Russell's up 5.3%. But, I don't
Which kind of picks up small caps.
Yeah, Russell 2000's the small caps.
Okay.
But, I don't have a crystal ball. I can't come out here and say I 100% believe this. There could be black swan events. There could be things that are going to happen that we have no idea that are going to happen. So we keep a close eye on the portfolios and what they're doing and how the market's performing.
So if you have any questions, if you have any concerns for Isaiah and the portfolios, feel free to reach out. As always, please share this with anybody you think would be appropriate to share with. And if there are folks that you think that we should have a conversation with, we're still taking on new clients. We'd love to hear from you. And if you have any comments, concerns, questions, please reach out to Isaiah and the advisory team. And do us a huge favor. Hit that like button. Smash the subscribe button. And whenever you have a chance, we'd love to hear a review from you. You can do that on our Google page.
Absolutely.
We love you guys. Thankful for our clients. We appreciate you. Until next week, God bless you.
See you next week.
Have a great day. Peace.